Ladies and gentlemen, good day and welcome to the UFLEX Limited Q4 FY23 result conference call hosted by Dolat Capital. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sachin Bobade from Dolat Capital. Thank you and over to you, sir.
Thank you, Zico. On behalf of Dolat Capital, I welcome you all to the Q4 FY23 earnings conference call of UFLEX Limited. Hope you all and your family are staying safe and healthy. From the management side, we have with us Mr. Rajesh Bhatia, Group President and Chief Financial Officer. Now I hand the floor to the management for their opening remark and then we would have question and answer session. Over to you, sir.
Thank you. Thanks everybody for being on this call. The key highlights for the FY23 and for the Q4, FY23 marks the highest ever revenue UFLEX has earned, and vis-a-vis last year we are up by more than 11%. We've also achieved the highest ever packaging business sales, both aseptic and flexible combined. So over the last year we have about 33% growth in this. Our Indian business is highest ever volumes, has done the highest ever volumes. It's also achieved the highest ever profitability. And for the year as a whole, we have an EBITDA of about 2070 crores versus 2,278 crores last year, so it's about down by about 9%. And the year was also exceptional in the sense that we suffered a devaluation loss of about 150 crores by two devaluations done by the Egyptian Central Bank, and we've also had substantial foreign exchange valuation losses arising from the dollar strength across against all the other currencies, which was also substantial for the year at about 190 crore. So when we look at the PAT level versus last year, so 350 crore is almost about 340 crore is what has hit financials. So a very substantial part of this is non-cash, but this is what the hit we had to take in the numbers, because as you consolidate into INR, your final balance sheet. The interest cost for the year is also slightly higher because we've seen the interest rates going up in all the jurisdictions. Euro, where we had zero Euribor, we now sitting at about 3.35%. US dollar interest rates have also gone up. Plus the working capital of where we started in the business in Nigeria, we had a higher impact of both on account of the interest cost increase as well as on account of the working capital deployment. So overall, the interest cost for the year went up significantly, and couple of things more. Aseptic packaging business did very well. So for the year as a whole, we had about 93-94% capacity utilization level. We also had a volume growth of about 115% in that business over the last year. And businesses for flexible packaging as well as for which also includes the holographic film, has also done pretty well, and we have had single-digit growth in those businesses as well in terms of the volume. So while the packaging films business has shown some kind of a softness because of a bunch of certain capacities, as well as the impact of the demand in Europe driven by the Russia-Ukraine conflict, which has led to a higher energy cost there, higher EMI costs, which today the people are paying because of the higher interest rates. So all this affected the consumption. The same story happened in U.S. as well. So at the time when there was a bunching of capacity, so these two situations in Europe and the physical impact of the Fed aggressive rate hike did impact the demand for the packaging films, because as the consumers cut down on their certain consumption to pay for their higher energy bills and pay for their higher mortgage EMIs, and that impacted the demand at the time when the new capacity had come on stream. So Q3 was probably the worst hit, in that Q4 is far better. And as we go into the month of May now, we've seen a better pricing, not at the same level at which we had in Q1 of the last year, but in Q1 of this year. Definitely, there is a certain pricing increases that has been taken by the industry as a whole. And hopefully, I think in next quarter or so, we will see a better performance by the packaging films business as well. And in the meanwhile, the other businesses, whether it is inks, adhesives, whether it is packaging, flexible, aseptic, cylinders, all of them continue to do very well. So if I were to segregate between the two things, the India business has done pretty well, where we've seen the record turnover, record volume, record profitability, and so that business has stood up. And the overall, if we see India business EBITDA also with last year, it's up. So the entire profitability, volumes, the entire business has done pretty well. It's the overseas bit, especially Europe and US, where the demand got impacted and the price pressures came. So that business is slowly coming back to the normal levels, and hopefully next few quarters we'll see a much better performance from this part of the business as well as other business in the. So that's the advantage we had in terms of the diversification, what we have, value-added products in the packaging. And if I see the results of all the other peers, I could see that between the Q3 and Q4, they are down as high as 80%. 30 to 50% is very normal, but about there are some numbers which are down as much as 80-85% as well on a quarterly EBITDA basis. Simply because that part of the business, flexible packaging films, that went through a bit of a pain because of the overcapacities and the situations that happened in Europe. So that, in a way, is nutshell the whole performance for FY23 and Q4. And I think the aseptic packaging business, as I said, we are at 93% capacity utilization. So we made efforts to debottleneck the existing capacity and all that, and hopefully this year the way it is going already, we'll be from the declared capacity, we should be at about 115 to 120% utilization levels with this debottleneck. And we are exploring further opportunities as to how do we debottleneck more in that business from the existing plant itself, so that we could take it up our capacity levels to about 12 billion packs a year from current 7 billion packs a year, while there continues to be a healthy demand for the product. And we've also established well there in our export market, and currently we are also exporting about 40% of our production from the aseptic business. So that in nutshell is what we've done in FY23 and Q4 23, FY23. And I'm ready for any questions that you may have. And just one thing more, we had announced earlier, that we are setting up facilities to manufacture our raw material for the packaging films, polyester packaging films. So, we in India, we are already at an advanced stage in that project, and we will probably complete that by the end of FY24 fiscal. But we've also now taken up a similar investment at Egypt also, where from which facility we take care of Middle East, Nigeria, Egypt itself, as well as our Poland facility. So our dependence on the market for procurement of the PET chips will become very, very minuscule. And so the intention is to capture those margins which are there in the backward by doing this backward integration. And our size today, almost in the polyester films, being almost the largest player in the world, I think we required a bit of protection, or you can say a strategic investment to ensure the raw material availability. We've suffered enough in the last 3 years when the raw materials were in a short supply. So not only the cost, but availability was also an issue, and of course, the higher freight rates also didn't help that business. So we've lost substantial margins because we were buying all the raw materials for the PET films plant from the third parties. And with the enhanced capacities coming in India, Poland, Nigeria, Russia, I think that then we need to insulate ourselves. So these two investments are not going to be, accretive of the top line, but they'll give us the higher margins as well as, quality control over the raw materials. And, the availability will no longer be an issue. Though in the last 2-3 years also, we didn't let our production of the PET film suffered, and most of the plants we were operating already at 90% plus utilization levels throughout the period. But yes, there was a lot of effort in terms of procuring and as well as reducing the cost. So hence these two investments. were planned. And they've been coming up well. And in India, by the end of this current system, we'll be up and running in that facility also. Thank you. Thank you. So that's what I wanted to say. Hello. Hello.
Thank you very much. So should we open for a question and answer session?
Yes.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Rushabh Shah from Anubhuti Advisors LLP. Please go ahead.
Thank you for the opportunity. So just, I think, wanted to understand again on the PET chips plant which you are setting up in Egypt. So what will be our capacity and again, what will be our absolute capex on that part? Can you please guide?
About $70 million is the capex, and that should produce about 200,000 tons of chips.
200,000 tons.
Yes.
Okay, and this will primarily cater to the Egypt plant, and along with that, even to Nigeria and Dubai. I missed that part of your initial commentary.
Nigeria, Dubai, Poland, and maybe to build some portions to Americas as well.
Okay, so how much of our requirement will be fulfilled from this plant for these all plants? The raw material requirement.
I think we should be about 60 to 70%.
60 to 70%. Perfect. So secondly, my question was with respect to our Dharwad capacity. So I think that whole 63,000 tons has been commissioned from April month, correct?
Yes.
Okay, and we are expecting revenue to the tune of 700 to 800 crores incremental per annum from this plant.
Yes.
Okay, margin profile will be the same as what we are doing on a standalone basis, or will there be any, positive or negative to that?
The same what we are doing currently, except that it will be bit, because it's a new facility, it's a larger facility than the existing one. So the manpower, if you see output, that cost is going to be much lower. It's a more efficient plant, so the power consumption is also going to be more efficient. So a bit of savings on the costs, but, overall, if we see in the southern part of the country, the margins, the prices and all that, so that's going to be pretty much the same.
Understood. And just on this PET chips plant which we are setting up in Panipat. So earlier we were guiding for it to be starting by April 25 when we initially announced this whole project. So
not 25.
Okay. So is my understanding correct that we are now commissioning it by likely of Q4 FY24?
Yeah.
Okay. And in terms of, we were also setting up an 18,000 ton CPP plant in Dubai. We announced along with the Dharwad capacity. So any update on that?
That has also been commissioned.
This month itself, this quarter?
This quarter.
Okay, understood. And just one last question on the pricing part. So I think in the yesterday's TV interview, you mentioned that pricing is, anywhere up 13 to 15% from last quarter. So just wanted to understand, was this in context of global prices or it's or India specific, or it's across the space that pricing has moved up?
The India prices moved up, so does the global prices also get impacted a bit. So I think overall itself, there's been an increase.
Okay. Okay. So, any rough, can we assume that margins for the entire year basically would be better than what we have achieved in FY23? I think we'll be better off than 12%.
We are 3 or 3 if we ignore that exchange aspect. I think it's too early to say as to how the packaging film business shapes up. I think let's give it another quarter before we make any judgment on as to what is the margin that we see, because that's a substantial business for us, and the margin profile of that will determine overall, what margins we make. So, aseptic margins and the packaging business, the flexible packaging business margins have improved in the last 1 year in FY23. But overall margin guidance, you have to give us another quarter before we come back to you.
Okay. So what were our aseptic margins in FY23 as a whole, if you can spell out?
Just
revenue and margins?
70.
Okay. And revenue number, if you can guide us?
No, we don't. We've not shared that.
Okay. Okay. But just last one part. So for, I think April and May, these months have been relatively far better than what we were seeing in Q3 and Q4 of FY23.
Yeah.
Right?
Yes.
Understood. Perfect, sir. I'll join in the follow-up queue. Thank you so much for the.
Thank you. Before we take the next question, a reminder to all participants that you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. Our next question is from the line of Kaushik Poddar from KB Capital Markets Private Limited. Please go ahead.
Can you please clarify the income tax rate that happened in some time back? I mean, a few months back. Is there any development?
We've given guidance that, at UFLEX level, we're not worried about any adverse impacts of that. So though we haven't heard anything back from the department, but that's the view we are maintaining. It's just because some of the customers have some questionable practices, and they come back tracing the original supplier from whom they take the raw material. There's nothing sort of beyond that, and we've already clarified through the stock exchanges our position on this, and there's been no update or any changes thereafter on that.
So just to get myself clear, there is no notice or something you have received from IT department, is it?
No demand has come.
No demand. Okay. And is any see, the packaging division gets a much higher PE multiple, and especially your aseptic packaging. I think it's a great thing you have. So is there any possibility of demerging the packaging from your film business?
Not in any immediate future, but these kind of structuring options can always be explored at an opportune time. So we abreast with as to what are the kind of margins aseptic, what are the kind of valuation aseptic will have, or the flexibles will have, and all that. But if you ask me at this point in time, there's nothing.
And on the sustainability front, I mean, all this usage of used plastic, has there been any incremental new development, something going up or coming down or something of that sort, or it's more or less the same?
There's nothing on that.
Okay. Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask. Ladies and gentlemen, you may press star and 1 to ask a question. Our next question is from the line of Nirav Saksaria from Living Root Capital. Please go ahead.
Yeah, actually I joined a bit late. So could you tell me that you have given a guidance in 22 regarding our profitability, but we won't able to reach that level. So what was the actual problem behind that?
I'm not able to hear you clearly. Can you repeat?
Mr. Saxeria, may we request you to use your handset, please?
So is this better?
Yeah, please speak and then we'll know.
Yeah. So in year 22, you have given revenue guidance, profitability guidance, but we weren't able to reach that level. So what was exactly the reason behind it?
So the revenue guidance, I think we are more or less there. We've said about 15,000 odd crores. We are at about 14,800 odd crores revenue. And the last 2 quarters, we did have a price impact on the packaging films business, which sort of, so we were a touch short of about 15,000 crore of guidance that we had given overall for the year. And, as I said already, and that started happening because Europe and so Europe had a dual problem. One is, as a consumer, within your limited budget, you started allocating more for your energy requirements, you started allocating more for your mortgage payments. So obviously the consumption got impacted there, and US it was more of from the point of view that the higher mortgage payments, somewhere the consumer adjusted their other sort of requirements, which brought which impacted the demand. And this all got impacted at a time when certain new capacities also came on. And that's the reason why we see the prices started softening and the demand getting impacted. So hopefully in Europe now the energy prices are back to the normal levels. A little bit higher though, but still there's a lot of respite, and we see that at least in the wholesale markets the prices are back to the normal, and once that translates, that benefit gets passed on to the consumer, right? So that pricing power will come back in Europe and the propensity to consume will increase. That's what we are all waiting for, and in the meanwhile, the excess capacity gets absorbed as the volume, because India per se, where the capacities came, has been growing still at a decent pace, and so India, 6 months is good enough to absorb one new plant that is set up at 10 to 11% of our rate. So I think all these things when happen simultaneously, the recovery takes a bit of a time, and that's what is expected, in the current quarter somewhat, and then from the next quarter. I think the things should be much better than what they were in Q3 and Q4.
And so by when do we expect the EU and the US business to normalize?
I think we should look at Q3 or Q4 of FY24.
Thank you so much, sir.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. Our next question is from the line of Avnish Shah from Arca FinCap. Please go ahead.
Hi, sir. Quick question from is on the repayment profile of the term debt. If you can just talk about the maturities for FY24, 25, 26.
I don't have that number as of now, but I think overall basis that should be within 500 overall.
So cumulatively over the next 3 years, it's going to be 500?
Oh, no. Every year.
Every year. Okay. And this is at the standalone or console level?
Console level.
Okay. Thank you, sir.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. I repeat, you may press star and 1 to ask a question. Our next question is from the line of Rajiv Arora from RS Leasing Consultants. Please go ahead.
Yeah, hi, good afternoon. Thanks for taking my question. First of all, congratulations on reasonable set of operational numbers despite all the headwinds and the exchange losses that the company sustained. My question is on the debt side. This year, the debt has increased by about 500 crores. Where do we expect, do we have any capital expenditure for which we may have to take debt? And where do we see our debt levels on a consolidated basis in the next financial year? Thank you.
So I think the only project we have right now is the chips plant. All other projects have been completed and the debt is fully drawn for that. So that's the one. And so this project is about close to about 580 odd crores, of which the debt level would be about 350 odd crores. So even if we take all the debt in the next financial year for this, minus the, sort of the debt levels, the amortization. So I don't see that, from a current level net debt of about 4,400 crores, there's going to be any substantial, sort of incremental increase.
So we should expect say about 4,500 crore rupees on net basis. Is that a correct understanding?
There's a working capital debt which we've not drawn because we incurring a lot from the internal accruals and all that. So maybe if we draw that to another maybe 500 odd crores.
Okay. Sir, one more question. On the trade receivable side, there is a quantum jump from last year. In fact, last year as compared to the year before the last year. So can we expect the levels of trade receivables to come down to the levels they used to be 3-4 years back?
How can that be? When we have from FY20 to 21, our top line was about 9,000 crores. Today we are at about 15,000 odd crores. So how can the receivables be at the same level when the volumes are growing, when the the commodity prices were high in the last couple of years and all that? It can't be at the same level. So it's the best to see it as in relation to your
debtors turnover ratio. In terms of the debtors turnover ratio, sir.
Yes.
Okay. Thank you so much.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. A reminder to all participants, you may press star and 1 to ask a question. Our next question is from the line of Rushabh Shah from Anubhuti Advisors LLP. Please go ahead.
So just an extension to the question asked by last participant. So I think for the next 2 years, our capex requirement would be to the tune of 700 to 750 odd crores. Yeah. So will we taking any incremental debt, or this will be both funded from internal accruals itself?
No, we'll take whatever is the debt possible to be drawn for that. We'll take that debt.
Okay. Okay. And are we looking for any repayment this fiscal, or the debt levels will be going up from these levels?
No. So we are looking at the normal amortization, which may be to the tune of 450 or 500 crores each year. So those normal amortization payments will continue to be made.
Okay. Okay. And in terms of our aseptic packaging, I think last time what we guided was that we are, we were going from 9 billion pouches to 12 billion in FY24. So are we going ahead with that project?
Part of the debottlenecking of the existing plant that we'll do. So that will not happen in FY. So that might only materialize by the end of FY24 or at best by January 24. That opportunity keep on looking in terms of how do we debottleneck the existing plant to produce more from this plant. And that typically happens because, you have more capacity, let's say, sometimes on printing, sometimes on extrusion. So you just try to find equipment to balance that so today our printing capacity is more in that plant and extrusion is a limited capacity. So we are going to add one more extruder in the existing plant that way.
Okay. But currently we are almost running above our capacity utilization, what we have.
Currently we are at a much higher than our existing capacity numbers.
Understood. Sir. Thank you for the opportunity.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. A reminder to all participants, you may press star and 1 to ask a question. Our next question is from the line of Nirav Saksaria from Living Root Capital. Please go ahead.
Sorry, I joined a bit late. So could you quantify the foreign exchange loss we had this quarter?
This quarter?
Well, for the year, sorry.
For the year is about 340 odd crores.
And so this was majorly because of the Egyptian currency?
So 150 crore of this is because of the announced devaluation by the Egyptian central bank. And the rest of this comes from because, after the Egyptian central bank announced a certain devaluation, the market is still pricing in the further devaluation or the further because, literally this dollar strength against all the currencies is driving all these countries hard. Nigeria, Egypt, Mexico. So we're seeing a constant pressure in terms of, their currency values against dollars. And when we convert those currencies into dollars and then from dollars to rupee, that's the impact which at a consolidation level. But if you talk of, there, like in India, if you're making a balance sheet in rupee, and in Egypt we are making a balance sheet in Egyptian pound. So there in the local currencies, there is only a positive impact seen in that business. But the moment you convert into INR reporting, that's what the differential comes into play, and then you convert your existing receivables, your existing debt at a dollar level, then that's where you take it.
Sure. Thank you so much.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. A reminder to all participants, you may press star and 1 to ask a question. Our next question is from the line of Avnish Shah from Arka FinCap. Please go ahead.
One more question from our end. What would be the geographical split of the revenues for FY23?
I think I'll say it in this manner that, India is the largest. Then next comes Egypt, and then Mexico, Poland, and then all the others are almost at the same level.
Okay, and India would be roughly 40%?
Yeah, India would be about 40%.
Understood. Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. Our next question is from the line of Rajiv Arora from RS Leasing Consultants. Please go ahead.
So my question was, thanks for taking it again. Are we considering any hedging instruments so that we can avoid any foreign currency losses in future?
No, actually, it's not possible. You can do that only to the extent that, you have your liabilities to hedge. But, you have regular sales. So when those have to be converted into the dollar number and from dollar to INR, so that impact cannot be there avoided on the balance sheet. Now, suppose to an extent you have a dollar loan and earning in a local currency, and then you have to convert. So you can probably hedge that, like we do hedge it in India. Only that hedging is sort of possible. Because ultimately the whole profit and loss account, your turnover and all that, so those losses will come on your balance sheet. The conversion losses will appear on your balance sheet.
So to which extent did we have the hedging in place?
We didn't have any hedging in place.
We did not have. So are we considering anything like this in future because of the lessons learned now?
No, we're not looking at any hedging as of now.
Can it be suggested that to the extent the stock is there, constant stock on an average basis, to that extent we can consider taking hedging, foreign currency hedging? Would it be possible? Is that a good suggestion?
Not, sort of, we looked at this, but, reacting to a situation now is not going to help it. So you may, because, today, if you talk about your forward covers are much more expensive than what they were. So if you book now and then you end up losing money on that as well, so it's not the right move.
Okay, thanks. Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. A reminder to all participants, you may press star and 1 to ask a question. That was the end of our question and answer session. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
So, thanks everybody for participating on our earnings call for Q4 and FY23. We'll surely update you, as and when there is any updates on any of our business which has a substantial impact. And the Q1 of FY24, we are upbeat on the flexibles, we are upbeat on the aseptic. There has been a pickup in the packaging films business as well. As I said, but it's too early to say, make sort of a final judgment about as to how the FY24 is going to shape up from a packaging films business perspective. So we'll be back with you with more insight about the business as we report our earnings for the next quarter. Thank you.
Thank you. On behalf of Dolat Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.